Hello. Thank you for joining us for another episode of This Week in AML. I'm John Byrne, Chair of the AMLRS Advisory Board.
And I'm Elliot Berman, our Creative Director. We are excited to welcome you to the This Week in AML podcast,
where we explore key news and developments in the global financial crime prevention community.
John, how are you this week?
I'm good, Elliot. How are you doing?
I'm good, too. So, you found something really interesting. The Wolfsberg Group issued a guidance piece on RFIs, or requests for information. And this isn't the RFI that you do when you want to hire someone. This is RFIs between respondent and correspondent banks for cross-border payments.
Right. Yeah. And to be fair, it was publicized on LinkedIn. It was on another discussion forum of financial investigative folks that I'm part of. Alan Ketley, who we interviewed a few weeks ago, who's the executive secretariat of Wolfsberg, has been pushing this out. This is basically a best practice paper. And I think as folks know that have been in the AML community for any length of time, that the Wolfsberg Group is 13 global banks that they put together frameworks, guidance, best practices to manage financial crime risk. And so they focus on KYC and obviously a variety of AML and CTF related issues. And this best practices is specifically designed for transaction monitoring.
Right. So as I was looking through it, it's clear that it's really focusing on a couple of challenges that you have in the payment space, cross-border payments where it's happening through correspondent banks. And that's not unusual. Most banks don't have direct relationships with, international banks in the foreign country. They transact their cross-border payments through either an office or a bank here in the U.S., often in one of the money centers, who then move the money on to either to the ultimate beneficiary's bank or to a bank along the way, and it gets there. So some of them take a number of steps. But the point here is the money moves, but John, as you and I have talked about many times, the KYC that the respondent bank does on its own customers doesn't get passed along with the wire advice. So when the correspondent gets the wire and starts doing its transaction monitoring and saying, oh, the destination's an issue, or because of high risk, or the beneficiary name pops up, maybe not on an actual sanctions list because that should be caught at the respondent bank, but on some other watch list of some kind that the correspondent is using. What do they do then? And this request for information process has been around, but it hasn't been as effectively used all the time, I think, as the Wolfsberg Group banks think it could be. And so they've put out this guidance paper.
Right. I want to give credit to a colleague that we're going to interview, and she's been kind enough to be part of conferences, panels that I've been moderating, and that's Sarah Beth Felix, the CEO at Palmero Consulting. She posted on LinkedIn when she looked at the RFI key takeaways, and I'll just list one because it's simple, but it's so on point. She said, when vetting a new respondent bank, ask better questions. And so that was a big takeaway from obviously the very specific list of things that the Wolfsberg RFI focuses on.
Yeah, and this is an extensive piece, and there is an appendix. I'm paging through here. I want to say this right. There's a 19-page appendix that's and it's called Guidance on RFI Questions and Expected Responses. Now, they make clear in the guidance piece that this is not a prescriptive list. You're not supposed to ask 19 pages worth of questions. But I think to Sarah Beth's point, understanding what you're trying to accomplish when you're onboarding a respondent bank as it relates to future risks, what their customer base is like, what types, in the same way that you ask an individual or a business customer when you onboard them, are you expecting to do wires? What's the volume? Where are they going? Why are you doing all these wire? Why do you need wire services? All of those KYC questions. It's essentially an extensive KYC on the respondent bank. One of the areas that that this guidance document talks about is that the correspondent banks, if something trips in their system and they're giving something a deeper look, they eventually may need to make a SAR no SAR filing decision if they're in the U.S. or the similar document that is required in the UK or the EU or Canada and other jurisdictions. Excuse me, jurisdictions as well. So one of the things that's important is if the RFI process can work smoothly with information going back and forth, it really helps the correspondent bank in making that determination.
Yeah, and as you say, there's 19 plus pages of questions, possible answers. So I pulled out a couple that I thought were interesting and obviously pretty useful. One is to provide the source of wealth of the underlying customer, and so the Wolfsberg folks, when they say why is that question being asked, they say, which understandable to us in our community, understanding the source of wealth or origin of income will help that correspondent to better understand whether the customer is engaged in transactions that are consistent with the referred income or wealth. And they use examples. Okay, the source of wealth can be salary from employment, business revenue, inheritance, sort of a key KYC issue, right? To understand, that's how you can make a decision, as you say before, whether or not a SAR should be potentially considered, because the source of wealth seems unusual or inconsistent with the type of customer. Then, there's direction there to go look further. And again, seems simple, seems obvious, but having these sorts of questions and possible answers listed in this guidance, I think, are particularly useful for training purposes. I would argue for regulator oversight, when they see that you have these lists of things that you do, and you can be consistent about it, right? You got to do it for most cases, whether different questions for individuals versus companies, of course, and that sort of thing. And they sort of play for that in the Q&A that they list.
Yeah, it is interesting. There's a section, this is kind of done in slide format, and one of the slides makes very clear, and I'm going to read, it's just one sentence, there is no, and that's underscored, no expectation or requirement for the correspondent bank to conduct due diligence on the respondent's customers, sometimes referred to as know your customer's customer, which I thought was interesting. And they actually cite to some 2016 FATF guidance on correspondent banking. As you and I know, correspondent banking has been around for a really long time, and from a compliance and a risk perspective, it presents challenges because people, organizations who are asked to be involved in transactions do end up being remote from the initiator of the transaction and oftentimes from the beneficiary. And so having enough that they're comfortable is tricky. And this RFI process, if it's well implemented, both by the respondent and the correspondent, can make that go much more smoothly.
Yeah, and hopefully I would have come up with this view regardless, but again, wanted to give Sarah Beth some credit. When she posted her thoughts on this, she said the guidance helpful not just for traditional foreign correspondent banking, and I agree with that. I mean, I think there's some of the things in there, like timelines. Is the respondent bank providing information in a timely fashion or not? And that could be something that you factor into your risk scoring, right? So, but that's an issue that you could have with any client, right? Any customer. The customer is not being responsive to your request for additional information, or they're not doing it in a timely fashion, there could be reasons for that. So I take her point that this guidance, while it's very specific to transaction monitoring, and Wolfsberg makes that very clear up front, some of the themes in here I think you can adapt to other sort of general KYC related challenges, as I would put it.
I agree with you, but I think you and I have talked about that general concept many times, and that is that a lot of what we do in the financial crime prevention process, you use in a lot of different parts of it. You might turn it just a little bit or tune it just a little bit, but the basic principles of, high quality information gathered in a timely way, responsive clients, effective analysis, all of those things, those really, work in all the different facets of financial crime prevention. And I think Sarah Beth's call out is spot on.
Right. And just to remind folks, I was able to sit down with their Executive Secretary Alan Ketley a few weeks ago. So if you want to learn more information, high level, about the Wolfsberg Group, take a look at that on our AML conversations. And this particular Wolfsberg, it's on the Wolfsberg website. A lot of people have posted it on LinkedIn, so you can find it there. But it was just introduced middle of the week this week.
Yes. So John, by the time people hear this episode, our Thursday webinar will be complete. But I know you've been burning up the microphone, recording a lot of podcasts. So tell us a few things that are coming in the next couple of days.
Yeah. So given what's going on in the U.S. regarding both unfounded and, in my humble opinion, disgusting attacks on both the FBI and the IRS, we got two individuals that I couldn't think of better people to talk to about the impact that this had on the working men and women in those agencies. Don Fort, former ISCI chief, he and I sat down yesterday, and I also talked to Dennis Lormel, the former head of TFOS, but currently the president of the Society of Retired FBI Agents, who sent a letter or a public statement, as it were, regarding the FBI's handling of the search warrant in the Mar-a-Lago situation, and also the unfortunate and sad response from policymakers. So that conversation will give you an insight into both the legal process, how it was carefully crafted, but also sort of the emotional impact that attacks can have day to day. And we've seen some of that already. The IRS is looking at all of their buildings around the country to ramp up security, sadly, because they think that's necessary. So those two interviews will come up in the next few days, and urge folks to listen to that. And I urge our AML community to stand strong. We need to have the backs of the men and women in IRS, FBI, Homeland Security, and other law enforcement agencies.
Yes, absolutely. As you know, I fully agree with you. A little bit of a look out to the end of September. On September 29th, our live streamed webinar, which will be at noon Eastern time, will be on ESG, a more sustainable future. And this particular webinar is certainly going to cover the topic broadly, but it is going to specifically focus on some things that are going on in the EU and the UK. And there are, of course, things going on here in the US as well. So you'll be able to register for that starting Friday when you hear this. So John, have a great weekend, and I will talk to you next week.
Take care, Elliot.
Yep. Bye-bye.